All right, morning. Morning, everyone. Let's start it up. Okay, we got a sell-off last night in the States, in the S&P, NASDAQ, Dow, across the board. About 0.75% in most indexes. Dow almost gave us 1% off the top, but we continue to see, each move that looks like it's going to start to form a breakout that pushes against resistance or up against support. Is a failure for a breakout, and we continue to stay in this exceptionally tight range, looking like we're going to end another week in less than a 1% range. Making that 9 weeks potentially, which I think may be the second or third longest streak in all-time history of being in 1% weekly ranges. There just hasn't been much room for any sort of trend to play out in the market overall, and that obviously funnels down into the single stock stuff. So, looking through these charts in the morning of the last couple weeks, even though we have had more volatility here in the local market, it's still been a lot tighter than usual, and it's been painful trying to find new ideas and coming up with anything to suggest as an actual trade. I think sometimes, and we may be getting into a bit of a scenario where no trade is the best trade, simply because the risk when you break out, there's a head fake and you kind of go with it and you end up on the wrong side. We need to see confirmation, I think. All right, moving on. We talk about a couple things that are out yesterday. Obviously, we continue to wait for the Greece scenario to play out. We had yesterday, the biggest news of the day was obviously that Greece wasn't able to come to a deal with creditors. We're basically on the last legs of that now. The payment is due on Sunday, if I'm not mistaken, or is it due on Monday? Yes, sorry, it's due on Tuesday of next week. We're due on Tuesday next week. There's a 2-day meeting which starts today, so don't expect anything today out of Greece. I don't know if the market starts to go off or to put pressure on Europe and ahead of this deal or not. It's kind of I think the market's just so tired of hearing about this deal. I know that I am. I know that people that I'm speaking to also kind of tired of listening to it. I just want to end to it whichever way it ends, but so that we can start to focus on everything else. And I really think that we'll only probably break out of this range that we've been in once the Greece thing is resolved. All right, in Asia overnight, all the markets were down across the board. The biggest loser there was Australia. I think last I looked, actually, Shanghai had turned positive. I'm not sure if it's still positive as of now, but the big news yesterday was that the authorities might take away the 75% loan-to-deposit rule, and that I think is really interesting. These guys are starting to seem like they're getting desperate to find any measure to really try to bolster the economy. I don't think that there's anything that they can do to work. It's really smelling very much like when we started to get all the rate cuts in 2008, and it was way too little too late at that point. So. But there's nothing else really to focus on in terms of leadership. Yesterday we did close at an 18-year high on the Nikkei, but we're giving just a touch of that back this morning. Other than that, not a whole lot to pay attention to there. No corporate action to report in terms of market data. Only stuff out of the States today of any importance. That's personal income, personal spending, and jobless claims. I actually think that these numbers, personal income and spending numbers, are more important now than they kind of had. I know a lot of people are talking about the consumer now as being the maybe last piece of the puzzle of what the Fed's looking for. I know we kind of keep knocking things off from wage growth to unemployment and whatever. They just knock one thing off and then they come up with another. But I think they're wanting to see the health of the consumer return. If we start to see a nice personal spending number and a nice personal income number, market will probably be really happy with that. All right, let's move on to the maps. Like I said to you before, there's just not that much to really look at here. But we're gonna do it anyway. The first one we're gonna look at here is capital and counties, and you can see. We'll drag this out a little bit, but this is This is really a beautiful chart. It's classic how we've made these moves. So really, I think you can say that we broke out somewhere there, obviously, in that little consolidation range where we put in another consolidation here. Sorry, that's a terrible line, but very clearly defined in my mind levels here that we've broken out from. You can see pretty symmetrical, really topping out, and we broke out of that yesterday. We broke out nicely on a closing basis, and horizontally here we really came down and we tested the breakout here when we pulled back under this pattern. And I think there's a nice move to the upside coming here, probably as much as $5, which will give us a target up to around 85, maybe 85 and change. So this stock is really an outlier for the sector. All right, if we look at Truworths, couple reasons why this is interesting. One, we kind of come up here and we've been consolidating around what I think maybe you could throw out as some sort of resistance at 84. Maybe the way that we broke down here out of this little, I don't even think you can call that a flag because that's a larger part of a consolidation, but this is definitely to me looking a little bit like a bear flag, and it takes one move for us really to drop out of that, and then we'll kind of look like we failed at what was potentially resistance somewhere between 84 and 87 up here. In fact, I think 87 is probably the better resistance, which we touched yesterday. So if we drop below 84 today, I don't see any reason why we can't drop out and come down here and retest the lows, maybe even take them out. All right, and let's look at Old Mutual here. Old Mutual are kind of flirting around this 40 level, which is a major level. If we look at this in a little bit more short term, it's looking potentially a little bit inverse head and shoulder-ish if we get through the 40.5 level. But like I said, we need to have a nice breakout there, and we could easily turn around and get back below 40, and this thing could be looking bearish. But if we get above 40.5, this will look a little bit inverse head and shoulder-ish, giving us a target up around 42. All right, and then the last one that we'll look at is Sunlum. Sunlum, we've looked at this several times, but I just wanted to throw it out again. We closed just below the 69 level. We did get above it, only a hair, I believe, at the end of yesterday's session. This range has been going for literally 1 month. It's hard to remember a time when this thing's been as range bound as this. Now, I want to look at the 30-minute chart and look at that consolidation. That's incredible. And so you can see very, very clearly defined 69. You can see we've tried to get above it, to a small extent, but only by a few cents and only for a very, very short amount of time. We're going to need to see this thing actually kind of close a 30-minute bar above 69, I think, before you can lean into it. Maybe, give us a 69.30, 69.40 sort of level, and then once it gets up there, I think you can really try to go with it, because I think we're going to make a quick move up close to 72, maybe 71.5 after if we break out from 69. And that's it for today, guys. Good luck out there.